Hey everyone, Couch Investor back on our earnings video for today. So, Microsoft and Alphabet both reported earnings. Now, if you look at the highlight numbers, you might say, wow, pretty good performance by both companies. Yet, one company at the time of making this video is up 5%, while the other one, which is Alphabet, is down 6%. So what exactly has happened? Well, in this video, we're going to go over both reports. But first up, a quick reminder of how the stock is looking. Of course, this is right now. Tomorrow, these numbers will be updated, but just so you get a bit of the gist of it, this is the numbers for the stock, the valuation metrics for the stock, Alphabet and Microsoft compared to its 5-year mean. Of course, you will say, traditionally speaking, yes, Microsoft stock is more expensive because if you look at PE, right now it's more expensive than before. If you look at EV to EBITDA, same thing there. Price to sales, price to free cash flow, Microsoft is overvalued. As for Google, there are some couple of metrics here, well, all of them besides price to sales, where the stock is undervalued. But in my opinion, both businesses are still incredible businesses to own for the future. I don't think that you can say, oh, Microsoft is overvalued right now, so I'm not going to buy the business. Because right now, Microsoft is going through another phase of growth, of change, whether it's AI, Copilot, the cloud business accelerating or growing even more. Remember, there are already big cloud players. AWS, Azure, Google Cloud, which we'll have to talk about when going over the Alphabet report. It's still small compared to the total addressable market. So there's still a lot of growth ahead with regards to the cloud business. And then for all the other things that they're selling, software, cybersecurity, yes, there is cybersecurity in that as well. And now, of course, with Activision there as well, they become a huge player in the gaming industry, which is also worth hundreds and hundreds of billions of dollars. So, yes, you could say, traditionally speaking, the stock is expensive. Maybe I want to buy when the stock will be in the red. Okay, it's always better to buy on red days than green days any day. But, okay, this is the picture right now. Now, we're going to start with Alphabet. Of course, Alphabet at the start of this year, the stock was very heavily hit. Same thing with Amazon. We also had, of course, the whole AI debacle, etc. But since then, Alphabet has done quite a remarkable comeback. So let's first start with a couple of comments here from the CEO and the CIO, CFO. I am pleased with our financial results and our product momentum this quarter with AI-driven innovations across search, YouTube, cloud, our Pixel devices, and more. By the way, if you have pre-ordered your Pixel devices, let me know down in the comments below. I did, but I'm still waiting to get it because I think it's getting released right now, actually, today or tomorrow. We're continuing to focus on making AI more helpful for everyone. There is exciting progress and lots more to come. Ruth Porat, President and Chief Investment Officer, CFO, lots of titles here. The fundamental strength of our business was apparent again in Q3, with $77 billion in revenue up 11% year over year, driven by meaningful growth in search and YouTube and momentum in cloud. We continue to focus on judicious capital allocation to deliver sustainable financial value. Now, the cloud part is what, in my opinion, is driving the stock down a bit. Of course, we're going to have a deeper look into the numbers, but first, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of this month, so thank you every month for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, revenues. $76.69 billion, that's up 11% year over year. Operating income $21.34 billion with now an operating margin of 28%, improving, of course, year over year here. Net income, much better. Look at the huge difference here. Same quarter last year, $13.91 billion. This quarter, $19.68 billion. Diluted earnings per share. Last year, $1.06, now $1.55. If we look at the breakdown here, we can see that Google advertising continues to grow year over year. So we're back on track, let's say. YouTube ads is improving as well, which of course is great to hear, not just for Google, but if you're owning any other advertising player out there. Pretty good news. And by the way, Snap reported earnings as well. Stock was up 13% last time I checked. So, We live in a bizarre world where Snapchat is up 13%, Alphabet is down 5%. So, okay. Then with regards to Google Cloud, last year, same quarter, $6.86 billion, now $8.41 billion. Apparently, it has not grown as fast as what the market was expecting. All the other segments beat the expectations, but Google Cloud did not, and probably that's one of the reasons why the stock is down. Fun fact, number of employees might be down year over year, but quarter over quarter, it's actually up 1,000 employees. So, okay, congrats to them. Then with regards to operating income, Google services increased. Now Google Cloud, of course, last year we know was unprofitable. Now we reached $266 million. That is down quarter over quarter. So again, Google Cloud is probably the reason why the stock is being pulled down by the market. But overall, they have now $4 billion more income from operations than last year. As for stock repurchase, they repurchased basically in line with what they were repurchasing a year ago, $15.78 billion. And last thing here for Alphabet, free cash flow, $22.6 billion. Net cash provided by operating activities, $30.65 billion. I mean, not too bad. So looking at the graph right now, of course, with the stock being down a bit, we reached close to $140. Now we're back under the 20 and the 50-day moving average. Maybe we're going to hover around that $130 line. I would say buy zone around that 200-day moving average, which is closer to $120. With regards to RSI, yes, we were pretty high, but not overbought yet. So keep an eye out on those prices here. I would say 120, 130. Let's see if it can trade in that range. Now, let's move over to Microsoft. So Microsoft revenue was $56.5 billion and increased 13% year over year. Operating income $26.9 billion, increased 25%. I mean, it's pretty remarkable when you're going to look at all these numbers. It's actually very crazy. Net income $22.3 billion, increased 27%. Diluted earnings per share was $2.99, and that also increased 27%. So a comment here by Satya Nadella. With Copilots, we are making the age of AI real for people and businesses everywhere. We are rapidly infusing AI across every layer of the tech stack and for every role and business process to drive productivity gains for our customers. Consistent execution by our sales teams and partners drove a strong start to the fiscal year, and Microsoft Cloud revenue of $31.8 billion, up 24% year over year. That's a very, very significant number and puts the bar extremely high, especially when we will go over Amazon's earnings on Thursday. So the business highlights. First segment, productivity and business processes. So Office commercial products and cloud services revenue increased 15%, driven by Office 365 commercial revenue growth of 18%. As for the Office consumer products and cloud services, that increased just 3%. And Microsoft 365 consumer subscribers grew to 76.7 million. LinkedIn revenue increased just 8%. Dynamics product and cloud services revenue increased 22%, driven by Dynamics 365 revenue growth of 28%. I believe even quarter over quarter, this is a nice number. As for Intelligent Cloud, server products and cloud service revenue increased 21%, driven by Azure and other cloud services revenue growth of 29%. This is, again, I believe last quarter was an increase of 26 or 27% or so. So, I mean, they clearly have some momentum here. The last thing with regards to more personal computing, so Windows revenue increased 5% with Windows OEM revenue growth of 4% and Windows commercial products and cloud services revenue growth of 8%. Devices revenue decreased 22% because, I mean, what were they selling? Now, with regards to Xbox content and services, those revenues increased 13%. As for search and news advertising revenue, excluding traffic acquisition cost, that increased 10%. And Microsoft also returned $9.1 billion to shareholders in form of share repurchases and dividends in the first quarter of fiscal year 2024. Now, if you're familiar with Microsoft, you know that they don't really give guidance in the earnings report. They usually give guidance in the earnings call. So what happened previously was basically the report could have been okay, and the stock was down, but then earnings call happens, the stock suddenly jumps up. So it remains to be seen what they're going to say in the earnings call that could affect the stock negatively or push it even higher. Now, looking at the graph here right now, after hours, we're back at the, I think it's all-time highs around $240 something or so. Of course, we got rejected there twice, once in November 2021 and once July 2023. Let's see if this time the stock can hold up there. So that will be it for this video. Look, it's two great businesses. One just reported maybe better numbers than the other. And in this current climate, a small misstep is going to be a punishing one for the stock. And that's exactly what we're seeing with Alphabet. But both companies, I think, are probably a very, very good bet for the future. Of course, do share your thoughts down in the comments below. Do you own one of those? Do you own both in your portfolio? Let me know down in the comments. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.